Hey, what's going on, guys? Austin here. Quick portfolio update. We're green. We're up 1% today at 27,300. My positions, I have a put expiring on the 18th and 2 covered calls expiring on the 18th. I will most likely be rolling these 2 covered calls, and this put I will let expire worthless and then sell another one for November. And then I've already rolled this one out, 112 for November as well. Still a lot of premium to collect on here. But guys, I want to talk to you guys about cash secure puts and how they are really a win-win strategy. I mean, you can't lose as long as you stick with it, right? First off, you're going to need capital to own 100 shares of whatever stock you pick. You definitely want to pick a good company that's profitable and preferably with good premiums. NVDA is amazing for this strategy. Even Tesla, if it trades a little cheaper, can be amazing for this strategy as well. Those 2 companies, great profitable companies. NVIDIA is the king, really. NVIDIA, I mean, great implied volatility, which means your premiums are going to be huge. I mean, like for instance, let's say I didn't own 200 shares, right? Let's say I did not own 200 shares of NVIDIA, and I just wanted to sell 4 cash secure puts, okay? Click NVIDIA, trade options. Shoot, we can even go out 2 weeks. Let's see what 2 weeks is offering us. Sell a put. We'll probably do like a 115. Most likely going to end in my favor. Boom. I mean, you make $700 right there in 2 weeks. You can make $700. I mean, it's unreal. And it's very safe. It's a good quality company. It is, what, $7 out of the money right now? And the reason I can sell 4 of these, by the way, is I have margin turned on. So I think around 2.5 would be of my brokerage cash, and then the other 1.5 would be off of margin. That's how I'm able to do this. But yeah, I mean, $700 in 2 weeks. And then let's just say you want to go out a month and a half, right? We'll even play it safer because we're going out a month and a half. We'll go to 110. You're making $1,300 in like what, 40 days, 45 days, $1,300, and it's safe, and you're getting in at a good price. I mean, right now Nvidia is at what, 122, 123. You're getting Nvidia at you're getting paid $1,300 to buy Nvidia at 110. And if you don't want to buy it at 110, and this is strictly a cash grab for you, as long as NVIDIA expires over 110, you collect the $1,300 for free. And if NVIDIA expires below it, you can choose to either buy the shares or roll it out another month. Roll it out to like December 15th or whatever that expiration date may be. Roll it out another month, and you can either keep it at the same strike, because guess what? Markets tend to go up over time, right? So the cool thing about selling cash secure puts is you don't always have to lower your strike. Now, if you pick a bad company or a bad stock that is in a downward trend and it's a piece of crap company, you might have to either cut your losses or you're going to have to roll down. But if you pick one of the FANG or one of the MAG 7 stocks, you know, Microsoft, Apple, NVIDIA, Facebook, or Meta, if you pick one of those, odds are you're going to be pretty safe. So you would never really have to roll down. You could just keep selling the 110 and rolling it out, and guess what? NVIDIA will eventually go back above 110. So you can keep collecting that 110 premium and not have to go down and sacrifice some of the premium. You can keep it at the same strike price. Then if you ever choose to own the shares, like myself, I have 2 covered calls and 2 cash secure puts. So either way, I'm going to be making money. Stock goes down, covered calls are going to be making money. Stock goes up, my cash secure puts will be making money, aka expiring worthless. That's the whole goal. I sold this one on the last day of September, so it expired in 18 days, and it's a quick $101 of credit. I mean, it's that easy. It's really that easy, and we're $14 out of the money. NVIDIA would have to fall over 10% in 2 weeks for this to be in the money. And guess what? If it goes in the money, shoot, I might buy them. I might take ownership at 108. My break-even price is 106.99 because of the credit. So really, it's like I'm buying it at 106.99, which I am actually perfectly okay with because that is about my average cost per share right now anyways. My average cost is 106.79. So I'm perfectly okay with getting another 100 shares at this price. I'm a firm believer in NVIDIA. For the PC market, they have around, I think it's 80% share for chips in the PC market. They're the leading competitor in AI. I don't even think it's close. I mean, they grew 100% year over year last year, and they're predicted 40% for the next year, which 40% growth on a $3 trillion company is insane. I think Apple's growing from 8 to 10%. NVIDIA's growing 40%. That is insane. And the premiums, I'll even compare them to you real quick, okay? We'll go to Google. This is a big company as well. We'll go out a couple weeks. We'll sell a put. Let's go like 160. Implied volatility on the right side of your screen, 28%, 28.38%. All right. Let's go to another company. Let's go to Apple. We'll go to, what is it, 225. We'll go right here. Implied volatility, 26%. Now let's check out NVIDIA. NVIDIA, let's go 115. Almost 50% implied volatility. That's almost twice as much as Apple, okay? Now that does mean the stock's going to be moving a lot. But that's what you want. I mean, you want, it's a good company, first of all. It's off of its all-time high. Its all-time high was around 140, I believe. Yeah, 52-week high, 140.76. You're about $20 off of your 52-week high. That's great. That's like 15% off of your high, which is great. Tesla, let's look at the implied volatility for Tesla. Actually, I don't think this is going to be a good indicator because their earnings are on the 23rd, so the 18th contract should be pretty reasonable. We'll go here. Look at Tesla, 65%. Insane. But guess how much capital you're going to need? $23,000 to sell this, right? Well, $22,000 if you minus the credit you're about to get. You only technically need $22,250. So you need a lot of more capital to do Tesla. But Tesla is also a little overpriced right now. It's got a PE ratio of around 70, which is a bit high. I mean, it is down on the week. It was trading at 262. Now it's at 239, which is a pretty good dip. I mean, you're looking at what? About a 10% dip, yeah? 8 or 9% dip. That's pretty decent. Still a little bit rich in my favor. If it gets under 50, I would definitely say that's probably where I would want to be selling cash secure puts, is once it gets under 50, maybe even a 55 PE. I would feel comfortable selling cash secure puts on Tesla. As of right now, I'm going to stick with NVIDIA. NVIDIA is trading at a 55, and my average cost, I bought in when NVIDIA was trading at like a 45 to 48, somewhere in that range. I bought in, which a 45 PE on a 40% growth company is insane. Like, that is very, very reasonable. Yeah, guys, cash secure puts, I mean, it's a win-win strategy. Worst case scenario goes in the money, you just roll it out. Or you take ownership. It's completely fine. This 112 put, I do not plan on taking ownership of this. This is strictly to collect the rest of this $385 that's still left on this contract. Average credit was $549. It is strictly to collect this $549 and build up a cash position right now to hopefully sell another NVIDIA put in the future. This is also a cash grab, but at the same time, I wouldn't mind owning more NVIDIA shares. So I kind of want to keep the balance of 2 cash secure puts and 2 covered calls, but we'll see. These I most likely will roll out. I kind of want to see if I let them expire, right? And I completely just dumped all my NVDA shares. I could sell 4 cash secure puts, which I am kind of interested in. I'm not going to lie. I mean, I could sell 111 really safe. I can just collect $400 in 2 weeks. That's $200 a week. $800 a month. And that's super safe. This is probably where I'd want to go, though. I mean, that's 700, so what, you're looking at $350 a week? So you're looking at $1,400 a month? I mean, $1,400 a month? That's insane. But yeah, guys, I 10 out of 10 cash secure puts and cover calls. You can't go wrong. I know buying options seems so much more fun, but it's just too risky. I mean, it's just not worth it. I mean, let your portfolio grow slowly over time. Compound interest is a real thing. And just do your thing. Like right now, I have $22,000 in option collateral. It's in margin, right? But I'm not paying interest on this margin because it is a cash secure put. You don't have to pay margin. What am I trying to say? Margin interest. You don't have to pay margin interest when you sell a cash secure put on margin. So it's almost like I'm borrowing $22,000 for free. For free. I'm making money selling cash secure puts, right? So if I were to sell, if I were to cancel all my trades right now, and I was to sell 2 of these, right? How much money would I need? Around $22,000. Yeah, exactly. I could sell this and make $350 with someone else's money, and I would get paid $350 and not have to pay that person a single dime for lending me their money. So Robinhood is giving me $22,000, and I'm not having to pay any margin on it because it's a cash secure put. Now, if I were to buy an option, like buy a call, I would have to pay margin interest. If I was to buy shares, I would have to pay margin interest. But if I just keep selling these cash secure puts, it's collateral. So like, it's just collateral. You don't have to pay margin interest on collateral, which is a very, very unique tool that you guys should definitely take advantage of. If everything is right, the market's right, take advantage. I'm not telling you to, but if that's exactly what I would do. I'm taking advantage of this free margin to sell cash secure puts. And that's what I'm doing. I mean, you guys are going to watch this portfolio grow and grow slowly over time. Yes, I'm still putting money into it. My goal is a minimum of $1,000 per month. On the first of every month, put $1,000 in. That's my plan. And hopefully by the end of the year, by January 1st, I'm hoping to have around, I should have at least 30. Yeah, because I've already put October's money in there. So November, December, that's 2 more thousand. So yeah, hopefully we get around $30,000 in the portfolio by the end of the year. And then by the end of next year, hopefully we'll be at 50. And then hopefully like 75, and then hopefully 100. That's my plans. And then we'll be in a 6-figure account, and we'll be able to sell so many more cash secure puts. Instead of having 1 sell, hopefully I can have like 5 or 6 sells, maybe even 10. But I'm telling you guys, you're going to need money to make money. If you have a little bit of money, yeah, you can try to learn how to trade. You're probably going to get your butt kicked in the beginning. Probably going to get your butt kicked for the first few years. And you're just going to be losing money for the first few years. So all that time, your money could be compounding interest. It's very difficult to make money trading unless you have years of experience. Then, because you're going against other people who have years of experience. But yeah, NVIDIA, I'm hoping we come back down. I really liked where we were earlier around this 115, 116 mark. Because I'm still iffy on these covered calls. What do you guys think I should do? You guys think I should ditch these covered calls and then just sell 4 cash secure puts? Or should I keep rolling out my covered calls? So let's see. If I were to roll it out, market's already closed, so none of these numbers are going to move. If I was to roll it out another 30 days from where it's expiring, I could go up 2 strikes and collect $172. Or I could go up 4 strikes and only collect $32. So do you guys think I should keep rolling up and out? Or should I just let them expire, sell 4 cash secure puts? Honestly, I'm kind of leaning either way. I think either way. So if they expire on the 18th, right? Selling some cash secure puts. Shit, if I could sell 4 of these, woo, buddy. That'd be insane. I mean, that's 2,000. That's $1,900, right? $1,900 on my portfolio. I mean, you're looking at what? We'll just say I got 27.3. 1,900 divided by 27.3. You're looking at almost a 6.9% return. So almost a 7% return in what, a month? That's pretty wild. That's pretty wild. If I ditched all these covered calls tomorrow, I could make $1,900 in a month. But actually, you know what? I'm not going to do that because guess what? I think NVIDIA's earnings are coming up. Oh, their earnings are on the November 26th. Shit, we still got it like a month and 3 weeks, so we're 7 weeks out. Yeah, we have jobs report coming out. Man, I want to say it's tomorrow. Don't quote me on that. I want to say it's tomorrow or sometime. Yeah, it should be tomorrow or Monday. But yeah, guys, I'm up 3,100 on these shares. Cover calls definitely went against me a little bit, but that's the name of the game. You know, if NVIDIA were to have tanked after I bought it at 106 and it tanked to 90, these covered calls would have saved me from a lot of downfall. So it's just the price you pay. At the end of the day, I still made money, right? I didn't make as much as I could, but I did make money. That's the whole name of the game, making money. I don't want to risk too much to the downside. Yeah, these puts, yeah, they would that would not be for earnings either. This contract would be with the earnings. Man, that's a lot of money to be made. And the shit, even if you played it safe, and I sold 4 down here and safe, that's still $1,300 in a month. Sheesh. And I would 100% take ownership of them down here. 100%. See, the predicament I'm in is... let me end the video. I'm not going to keep rambling on. All right, appreciate you guys for watching. Leave a comment. You know, I appreciate you guys, the couple that have left comments on my videos. I really appreciate it. I enjoy talking with other people who have similar interests with me. And, you know, I really enjoy this, make it feel like I'm not just talking to myself. But yeah, if you guys are investing, tell me what you're doing. You know, tell me if it's working out for you. And, you know, yeah, just talk with me, man. I appreciate you guys. Peace.